Hello everyone, this is Lien coming to you from the CME NYMEX floor. It was certainly a lively session in the foreign exchange market, and the currency that moved the most was the British pound. Now, that shouldn't be a surprise considering that we had a Bank of England monetary policy announcement today, and for the first time this year, the BOE raised interest rates by 25 basis points. Now, normally you would think that an increase in interest rates would lead to a currency strength, but instead of rising, sterling actually collapsed on the rate decision. And there are three specific reasons why sterling performed as poorly as it did. The first one had to do with the fact that it was a dovish hike. The second was that there's prevailing Brexit concerns. And the third is that the Federal Reserve is looking to raise interest rates in September, and everyone's looking forward to the non-farm payrolls report on Friday for confirmation that they will move forward. Now, if we break that down into further detail, starting with the dovish hike, the reason why this was considered a dovish hike was because even though Governor Carney made it pretty clear that further tightening would be needed, and he basically had a fairly positive outlook on the UK economy. He talked a lot about how business investment is slowing and that they need to keep on guard with the situation in Brexit, or situation with Brexit being so volatile. Now, in terms of Brexit, that was kind of the overriding factor that had kept the British pound so weak going into the rate decision, even though the market had already priced in a rate hike. So now that the rate decision has cleared, everyone can refocus on Brexit and the fact that the negotiations aren't going anywhere. The March deadline for Brexit is approaching quickly, and the lack of progress is making everyone nervous. And I think, not only has that put pressure on sterling throughout the past few months, but it can keep the currency under pressure and drive it well below 130 in the weeks to follow. Now, non-farm payrolls is scheduled for release on Friday. That's the last major event risk of the week. The U.S. dollar has been trading very well, and given the optimism of the Federal Reserve this past week, investors are positioning for a good enough payrolls report. Economists are actually looking for job growth to slow slightly, but that would be overshadowed by the pickup in wage growth as well as the improvement in the unemployment rate. So investors are banking on a good U.S. dollar number, and that's also another reason why sterling has performed so weak. Now, in the week ahead, if we continue to get misses in UK data, I think that's going to just reinforce the story that the BOE is one and done, and really exacerbate the slide in the British pound. So keep an eye on that, because both pound and dollar will be in play in the week ahead. Thank you so much. This is Lien.